Hey guys, Ray Meadows. My friends call me Uncle Ray, and welcome to another episode of the Crypto Bellwether. Today, we're going to talk about the number one method, the number one rule to guide you in being a consistent trader. And trust me, it's a tried and true method that pretty much every successful trader that I know implements. Well, what is it? Well, there's 5 parts to it, and I would highly suggest writing them down. The first part is simple. What are you looking to trade? The second part, which is hugely important, is why. Why am I going to trade this coin? The third part is the amount. And then the fourth part is what is my time frame once I implement this trade? How long do I want to deploy this capital? That's pretty damn important. Now the last part is, and probably the most important part, is the reaction. How am I going to react when this thing starts to move? Because think about it. There's only 3 things that are going to happen when you put on a trade. It's going to go up, it's going to go down, or it's going to trade sideways in a range. How are you going to react? Are you going to cost average up? Are you going to cost average down? Are you just going to cut your losses? What are you going to do? Write all that down and think about it like blockchain technology. Think about it as a smart contract. Once you put it in that block, whatever you put in there is going to happen. If you can be that consistent, I promise your trading will be that consistent as well. You don't want to get in the middle of a trade and then just wing it and play it by ear. You may get diamond hands or you may get paper hands, which both may be appropriate, but you want to know that going in, and you'll be a lot more consistent. That being said, I've also created a diamond hand your way to success video that's pretty damn good, and you should take a look at it. It's in the playlist. Now that I think about it, I should probably give you an example of how to implement this strategy. A couple of weeks ago, maybe 10 days ago, I put on a trade with Cardano. Okay, that was the what. The why was that Cardano, in my opinion, is a diamond hands trade. It's a 10-year play. It's definitely a 2-3 year play. So the downside to me was pretty limited. It's been pounded. I mean, it's got $90 billion in reserves backing it. It's got a huge community. It was the golden child just a year, 6 months ago, and now it's like the red-headed stepchild. So I thought that the downside was pretty limited. But the real why in the whole trade was not to hold it for long term, but that would be worst case scenario. If it went against me long, or if it went against me hard, I'd just hold it, and I felt comfortable with that. But the trade was, I was watching a podcast of the owner, like on Wednesday night or maybe Thursday night, and he was talking about what they got in the pipeline and that they were going to implement that Sunday where everyone can try and put their protocol basically on the platform and test it. So they were going to do a lot of testing. So when I looked at the technicals, I thought, well, it's pretty much at the bottom, and it's got a little pop because of the publicity. It was on Twitter, and it was starting to get a little bit of conversation going on social media. So my thought process was, and I got to be honest, I was kind of forcing a trade. I wanted to trade on the weekend. But my thought is that I could put this trade on real quick, and if everything went good Sunday, it would be a topic of conversation on Monday, get a little 10-15% pop, I just liquidate and move on. Worst case scenario, it fell apart, something weird happened, and I would just hold it. Well, I don't know if you remember, but I woke up like Saturday morning about 4 o'clock in the morning, went to check my account, and man, everything was down. Uh, Bitcoin was down, I can't remember, 10, 15%. ETH was down. The market was just humming down. Cardano, I think, was like 15, 10, 12, 15% down. And just out of reflex, I wanted to just start buying more because I felt good at the low point, but that wasn't the trade. I stuck to my plan. Now, I bought a lot of other coins that night because my thinking was if I liked them yesterday and they're 20% down tonight, I like them a lot better. But that's a whole different video. So think about that. I still actually am holding Cardano because it did bounce off the bottom. It's getting closer to where I initially bought it. And now, after doing more research, I'm not really breaking it. My only question is, if I get into making a profit, am I going to go ahead and take it, or am I going to keep it long term? Because I do feel real comfortable keeping it long term, because I truly believe Cardano is going to have their day. The only question I have is, do I want to go ahead and take a small profit and deploy that money in different markets? But anyway, hopefully this makes sense to you. I promise you, if you implement it, you'll be a lot more consistent. And I've also created a video of how to diamond hand your way to success in crypto that's in the playlist. Take a look at that because it's pretty damn good. And it's a truly good way to be long-term consistent in any market. Now, that being said, I am not a financial advisor. I'm just a guy here trying to give my knowledge and learn. So keep that in mind. Do your homework and really watch that video. I think you'll learn some more stuff. Now, if you haven't subscribed, please do so. We want you to be part of this community. Hit that bell so you don't miss any of the other videos. Hit the like button and share with like-minded people. And hey guys, come back. Take care.